So looking at global sales and growth rates from 2008 to 2018, our latest luxury goods research indicates another solid year's performance for 2013. This has been in the face of profit warnings from some of the world's leading luxury brands, mounting troubles in the Eurozone, and political instability in several of the emerging markets. Our latest findings indicate that we are definitely witnessing a renewed sense of positive momentum across the luxury industry. Luxury spending in China is rising steeply despite a government clampdown on extravagant consumption. A weaker yen is bolstering Japan's penchant for premium brands. Affordable luxury is still breaking new ground in Western Europe and North America, and a rapidly expanding A/B class across Sub-Saharan Africa, Latin America, and emerging Asia is fueling a new culture for luxury aspiration. In fact, thanks to swelling ranks of the burgeoning middle classes in emerging markets from China to South Africa and Brazil, luxury consumers the world over indulged over 6 billion a week on luxury goods, and is set to increase by 34% over the next 5 years. So where is this spend really coming from? Although demand for luxury goods has been relatively weak in many of the developed markets, as domestic consumers reined in discretionary spending, these countries still remain by far the largest spenders, with the two biggest markets, the US and Japan, in 2013, together accounting for over a third of global value sales. Therefore, whilst the emerging markets such as India and China are throwing invaluable lifelines of growth to the industry, the future behaviour of consumers in established luxury markets will continue to have a significant impact on the global landscape. So, focusing on regional sales and growth rates in the luxury goods industry, what's becoming more apparent is the dominance of emerging market regions like Asia Pacific and Latin America. Whilst Western Europe currently takes the lead in regional value sales, accounting for around 33% of total global luxury sales, Asia Pacific is catching up at a very impressive rate. Sales of luxury goods in this region are forecast to grow by a massive 170% in the next 5 years. We predict that Asia Pacific will overtake Western Europe as early as 2018 to become the largest region. At the same time, the value of Latin America's luxury market has skyrocketed in the last 5 years, thanks to growing middle class, strong consumer confidence, wider access to consumer credit, and a surge in retail modernization. So what is it that people are spending all this money on? According to our latest luxury goods research, designer apparel clearly remains the world's largest luxury goods category. Currently, it accounts for almost 42% of global spend. Looking at key growth areas, luxury accessories has continued to gain impressive ground, benefiting from its relatively accessible price points. Luxury accessories has become especially prominent in the emerging markets as disposable incomes grow and consumers trade up. Luxury brands such as Michael Kors and Coach, with portfolios of affordable luxury handbags, timepieces, sunglasses and fashion accessories, have clearly won over the middle-class consumers who can no longer afford the likes of Prada or Louis Vuitton. But they also act as a stepping stone into luxury for new luxury consumers in the emerging markets.